investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA, and it's one that we reviewed last Monday when we had our open house Q&A session. In that 1 hour event, we talked about the possibility of a pullback this week and the beginning of what could be a correction in not just the Dow, but the S&P, Russell 2000, and all the other major indices. As you can see, Friday the 6th, we had a dramatic sell-off here on higher volume. And it's that higher volume that we pay very close attention to, because if we get another day on Monday where we have a red candle and the volume accelerates, then most likely we will come back down here to fill this gap down around the 174 mark on the diamonds. And what we could see is, again, a fill of that gap, and we'll have to see whether or not the market bounces from that point. Now, if we look at the Russell 2000, this is a more broad-based index, we had this resistance line here that was identified as a broadening top. As I go to the weekly chart, you can see what we were talking about: higher highs followed by lower lows. A broadening top pattern is something that we should all pay very close attention to, because when the market pulls back from a top like this, it could very well go to test the bottom of that broadening pattern and test support, which would be this diagonal line down here right around the Russell 2000 1000 level. So that would be a dramatic pullback for the Russell 2000, and you can see that we had a bearish engulfing pattern this week. Again, another pattern you could not ignore, because as you can see, last time we had a bearish engulfing pattern at that resistance point, we had a dramatic sell-off in the Russell 2000, and then we also saw the domino effect happen in the rest of the markets. If I go back to the daily chart and look at the spiders, this is the SPY, it's the ETF for the S&P 500 index. You can see the same thing is happening. We have pulled back from a resistance line right here on accelerated volume to the point where the volume was more than twice that of what we saw on Thursday. So again, the sellers are accelerating with a gap down below the market here right around 202.5. And again, that would be a fairly significant pullback, and it's one that I could see happening next week. So I'm going to draw my line looking something like that. I think that's the angle of what we could see next week and maybe even the week after that. So if you have any long positions, I would encourage you to protect those with either stop loss orders, options, or maybe even sell half of your position to move to cash so that you have buying power the next time we have a sale day and we reach a support level where you can actually start moving back into the market. We look at the Qs, that's QQQ. We call this the power shares. It represents the ETF for the NASDAQ market. Again, you can see that there is a resistance area that is following quite nicely. We see a pullback again on accelerated volume. So I think the NASDAQ could also pull back. I don't think that's unreasonable for me to draw a line like that, because we've seen those types of lines in the past where the correction came swiftly before finding a level of support. So our next level of support for the Qs is going to be right around 100. So keep an eye on that as well. You know, the VIX is something I talk about almost every time. It's the volatility index. And this diagonal line represented what I thought the VIX would do. I was only off by about 5 days, but you can see obviously that the VIX is starting to accelerate to the upside. Remember, the VIX is a contrarian indicator to the S&P. So in other words, it's inversely related. When the VIX starts to climb, the S&P will most likely drop. And these are things you want to pay very, very close attention to. And it's something that we talk about throughout our weeks in our open house sessions especially. So you want to stay tuned to the Market Guys. If you'd like more educational content, just go to the Market Guys website and we have a video tab right there. This weekend, I will be working on some more educational content to post to this library. These are called market shots, and they're 3-minute lessons. They're just video educational snippets, I guess you could say. Again, market shots. And we talk about different ideas in the market and topping patterns and different types of strategies that you can use to make money, both on the upside when the markets are rallying and also during the times when the markets are correcting. You can make money on the way down. Just make sure you're paying very close attention and you're not overextending yourself in any position. You want to have some cash available so that you can have buying power when the time is right. You don't want to be totally invested in the market when the market is pulling back, because you can't do anything except sell at a loss. You want to have some cash. Cash is actually a position that equals opportunity when the markets pull back and then start to rally after they find support. So that's our weekly market report. Thank you for joining. We'll talk to you soon. So long.